Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, the Trump administration is eyeing CHIPS Act funds for a stake in Intel.
Plus, Applied Materials plunges due to growing trade concerns between the US and China.
And an in-depth interview with OpenAI chairman and Sierra CEO Bret Taylor. That's later in the hour. We go straight to the top story. Bloomberg reporting the White House is considering tapping US CHIPS Act funds in an effort to take a stake in American chipmaker Intel. That's according to sources. For more, Bloomberg's Joe Do joins us. Joe, what's the new information we're reporting today?
Right, a follow-on from yesterday's scoop from Bloomberg that it looks like the funding that the White House is looking at using would come from CHIPS Act money. Of course, everybody might remember that from the law passed during the Biden administration. We've understood that some of that money has laid dormant and could be potentially used for this potential equity stake that the administration is looking at in Intel.
Fascinating, because we understood there was almost $8 billion coming Intel's way, pre-agreed, maybe even $11 billion in loans. We don't know the intricacies of how much money and what equity stake that would be equivalent to.
Right.
But Joe, remind us why the US government is doing this, or even eyeing it.
The way to look at so much of this, Intel is one, of course, this hasn't happened, but we do have one that has happened, which was the MP Materials rare earth company that very few people have heard of, but just got a $400 million preferred equity stake investment from the Defense Department. It is all built around this idea of national security. What does the Trump administration, the White House, view as central to national security efforts, in particular related to its race against China? You have a rare earth company, potentially a chips company. Earlier this week, we had the announcement that NVIDIA and AMD would be giving 15% of their revenues generated out of China to the federal government. This is all built around this kind of new idea that Trump is trying to make work.
Joe, some basics. Intel has not commented directly on our reporting. They've issued this statement. We're going to put it on the screen now. And generally, right, this is the point that what the administration is trying to do is achieve onshoring of manufacturing of chips in this country. Intel kind of wants to do the same thing. There is more reporting that you did that a lot of this literally relates to the meeting this week between Lip-Bu-Tan and the president. What have sources told us?
We understand that this is the idea. This idea did come up in that meeting. I think the point that we draw from this, and I was just saying this earlier, is we have an administration, a president, not an administration, a president directly who's willing to just have a bilateral talk or negotiation with any CEO he can bring into the White House that he finds, central to some of the most important themes in his second term. So obviously, as the Intel chief come in, and as you've pointed out, Ed, we don't have a full confirm here that this is happening. These things remain fluid. We've seen this in so many different issues with the White House. A lot of it is just, hey, what about this? What about that? But in particular, related to this, the Intel chief does show up to the White House and has this conversation with the president, and this apparently is where this idea was spurred.
Bloomberg's Joe Do. Fascinating reporting. The scoops keep coming. We thank you. Look, let's dive into the Intel side of the equation, why they do it. Jordan Klein, Mizuho Securities Managing Director, joins us now, who put out a note this morning discussing the implications of a possible government stake. And look, Jordan, you're questioning it, asking how does the US government help Intel fix its leading edge node when it's not a money issue? They have no customers, and there is a good reason for that. Jordan, extrapolate on that.
Yeah, I mean, Intel, in my opinion, has two main issues. One is on the technology side, where their leading-edge foundry business has struggled to execute at these more advanced nodes, and they've lost, a lot of potential business and share to TSM, who's executed flawlessly. And the second big issue is, and this is kind of the chicken and the egg, is that they don't have any external non-Intel customers to move, volume and business into these fabs on this new leading edge. So you kind of need the former, meaning you need to be a leader and prove to customers you can execute at these advanced nodes for these, AI and leading edge chips. And then secondly, then you need to win the business. And until they get both of those, I think they're going to continue to struggle.
And Lip-Bu Tan really said that, articulated it in the earnings, saying we are not going to have this build it and they will come mentality. They've got to say that they're coming before we build it. And the 14A leading cutting edge nodes, for example, Jordan, is government control or a smaller equity stake going to secure that demand?
Well, on the surface, it's not, because the customers are going to ultimately decide, is Intel a company I can depend and count on for my most advanced, products that I have to get to the market? Why would I leave TSM, who's proven to me year after year that they can execute on the plan? I think the goal here is that Trump puts some money in or gets the government to invest and then uses that to get Intel to accelerate the process of building out these new fabs in Ohio. And then he can go to these customers like Broadcom, Qualcomm, Apple, and NVIDIA and say, oh, now they have the capability and you need to move more of your orders and production to a domestic leading, edge company like Intel.
Jordan, I really want the desk analysts' take and experience. We broke the story yesterday about the stake. We broke the story this morning about using CHIPS Act funds. What was the buy side saying to you about how they interpreted that news?
Yeah, that's kind of the key question. And I think it's I haven't heard a ton of questions as to, okay, what next? Does this mean I go out and buy Intel? Ultimately, if you look at semiconductors that have led much of the market this year, I think Intel has been the laggard due to their weak fundamentals. And a lot of people who need shorts to offset longs like NVIDIA, Broadcom, TSM have used Intel as that short. Now, today, the news about a stake and what this could mean, I think, gets people nervous. Maybe Intel's going to go on a run. I should cover my short. But outside of that, I do not hear, big mutual funds, the traditional guys who would come in, take a big stake and think this company's going to turn it around, acting on this and these headlines. One, because it's premature. But two, I think they're coming to the same conclusion that I just talked about, is that how does government money or an equity stake really bring them the customers or fix their internal technology problems? And that's unknown.
Jensen Huang and NVIDIA have demonstrated that proximity to the president has allowed them to move faster. I'm thinking principally actually about exports to the Gulf. A good relationship between the president and Lip-Bu Tan. Is there an unlock for Intel in that?
Well, I don't know what I think ultimately here's the way I see it, is that I don't think Trump likes the fact that the, largest, oldest and most established kind of U.S. foundry logic company in Intel is on its heels, struggling, losing share to these foreign players in Asia like TSM. I think it's a bad look. Obviously, he wants the U.S., to be great again, and that, so much depends on semiconductors. So I think the fact that they're firing people, reducing costs, struggling is just a bad look under his watch. And all this CHIPS Act money was allocated, and they got the most of it. So I think basically he's saying, I want some return for this, and I want to try to help this, semiconductor business domestically improve, and that's got to start with you somehow. So I think he's just putting pressure on them, and I don't know what other alternative Intel has. They can't really push back, and ultimately they'll probably take what money the government wants to invest and try to strengthen the relationship going forward.
Jordan, what's so interesting is then we heard on Air Force One, and we're going to discuss it more in the show later, a potential threat of 200 to 300% tariffs on semiconductors coming into the US. But there are huge carve-outs that we understand being written here, that if you're investing a lot in America, you don't face that. So that seems that TSMC and Samsung that are building in America aren't affected. Is he going to allow these big Asian chip giants to continue to build in America and get these sorts of carve-outs?
I don't know what other alternative they really have. I mean, the U.S. and the government and the administration is kind of in a tough spot here. they need to project a strategy of trying to get more domestic U.S. semiconductor capacity. But if you get too tough and put too high of a tariff, that really puts the U.S. consumer and our strategic technology, whether it's defense or AI, at a major disadvantage. And the reason that is because the U.S. doesn't have an alternative. It's not like, we can just shift to all this domestic capacity. It's going to take a lot of time and money to basically get that. And right now, that's basically TSM and a lot of Samsung and some of Intel. So I think that's why they get the carve-outs, is to buy time. And then ultimately, that time runs out, and then Trump's going to say, well, if we have the capacity here and Intel is, on a better footing and track, then we want you to push those orders and that money towards Intel and away from TSM and Samsung. And that's where he could start to then use the tariffs to basically push that business towards Intel.
Really thoughtful, and a great note. Jordan Klein of Mizuho, thanks for bringing your expertise. Shares of Applied Materials tumbling. Worst day since March 2020 after the company presented a disappointing sales forecast for the fiscal fourth quarter. Said it's seeing less demand from China. More, let's bring in Bloomberg's Brody Ford. What's so interesting is Lam Research came out a week or so ago and looked pretty buoyant about future growth and revenue. Very different for this chip equipment company.
You are pointing at the debate that is waging and all the sell-side reports in my inbox right now, right? I mean, on the call last night, the narrative from the company was that China demand is worse, and some of our largest customers are holding off due to kind of just general economic uncertainty, tariffs, and all that. But there's also a hint here of, as you said, some of the peers have done relatively well. So is Applied losing share here, or is this truly just a macroeconomic, it's hitting everybody the same way kind of issue?
They try to explain away those two categories of customer, right? In China, loads of chip makers have gone through a refresh of their equipment. But the larger customers they're talking about is largely TSMC and Samsung. And this is a tariffs issue. What is it?
Right. I think tariffs is the big word we heard, but I think also, I mean, we have an administration right now that's negotiating trade deals. I mean, we saw with the Intel news this morning. There's just a lot of economic uncertainty right now, right? I mean, some of the data coming out, people are questioning. And so the narrative we heard on the call, and I heard in a conversation with the CEO, is that companies are holding off purchases. They're not sure exactly what the economic picture looks like in 6 months. And so why do you want to make a multi-billion-dollar commitment right now? How about you hit the brakes for a little while?
And Brody, we put this in the deeper context, as you just hinted at, with Intel. This is at a time where we want more manufacturing in the United States, according to the administration. And Applied Materials is part of that. They've got, 80% of their revenue coming from abroad, but is that going to shift more to America?
That is the song they're singing, right? I mean, they say that we are involved with, Apple's initiatives and Samsung's. The actual dollars committed at this point, to me, don't look incredible, right? I mean, a lot of companies are talking about multi-billions invested in the U.S. and Applied is talking about hundreds of millions. And so I don't think the expectation is that revenue shifts to the U.S. in a meaningful way right now. But it's an interesting part of the narrative. I mean, how much can the administration push the industry to, reshore more of this demanding capacity?
Bloomberg's Brody Ford, thank you very much. Meanwhile, President Trump is en route to Alaska for a high-stakes meeting with Russian President Vladimir Putin. During the flight on Air Force One, he addressed the state of tariffs on chip makers, saying it could rise to as much as 300%. Listen to this.
They're all coming in because they want to beat the tariffs. Because if they open here, they don't have to pay tariffs. If they don't open here, they have to pay, in some cases, 200%, 300%. I haven't even set some of the tariffs yet. Chips and semiconductors will be setting sometime next week, week after.
For more on the tariff implications on chips and the broader technology sector, Martin Norton, Empower Chief Investment Strategist. Actually, of all the reporting out there, this is the president speaking on the record saying up to 300% tariffs on chips coming into America. I haven't even said the tariffs yet. This is the point. Policy keeps changing. As a strategist, how do you interpret it?
Well, I mean, I think there's a few things that we have to look at. First, we have to look at the breadth of the tariffs that we've seen and the way the market has reacted as tariffs have become part of the daily conversation. At first, April 2nd, this was something that the market felt was a disaster. But as we've rolled forward, we've seen little effect on corporate earnings. We've seen little effect on economic data. And I think there's this kind of benign neglect of tariffs as a concern for the market, which I think emboldens President Trump to continue to push forward bigger and bigger numbers. When we're looking at triple digits, of course, when we're talking about tariffs, that's a pretty astonishing thing. I really like how your last guest with Jordan really kind of talked about the very long-term emphasis here. Building manufacturing here in the U.S. is a long-term thing. Forcing companies or encouraging companies to buy U.S. is a long-term thing. And I think these tariffs are part of that game.
So if the end game is to bring chip manufacturing back to America, you agree with Jordan that it will work, or you disagree?
Well, I think there has to be a long-term commitment on the part of the administration and the folks in Washington to keep those tariffs in place. I think that's in question, whether that's something that we're going to see over the period of several years, because that's what it would take, several years to bring manufacturing back to the United States, or to the United States in the first place. So I think there's still an open question as to how effective it will be and how long-term that commitment will be.
And how long until you see it rewarding companies like an Applied Materials, which right here, right now, is having its worst day since March 2020 and eroded all of its gains for the year, Marta? How do you decide who are the winners longer term in this environment?
I think the winners is one of the bigger questions that we're looking at, especially when you start to look at it in the context of artificial intelligence. When we're taking a look at corporate earnings long term, of course, we're concerned about the effect that deglobalization will have on those corporate earnings. And yet, when we look at the estimates that artificial intelligence can add to corporate earnings and to profit margins, it more than offsets it. The question is who those winners are. And what we've seen in past periods of innovation is that the early winners are not necessarily the long-term, the enduring winners. And there's also questions as to how different industries respond. At first, folks thought, well, software is the next leg of this story, but that doesn't necessarily need to be the case. If some of these big tech companies can capture some of the developments there, it's not necessarily going to be the small cap companies that win. So when I'm looking at this and I'm thinking about how do you play this, I think it's more of a broad-based question than it is trying to find and pick those narrow winners.
So you take tech thinking to other industry groups.
That's right. Yes, absolutely. So, for example, if you're taking a look at where can you apply AI, where can you apply some of these narratives, one of the areas that we've heard talked about regularly is healthcare and applying artificial intelligence to research and development. That's a long-term play, and of course there's tons of headwinds against healthcare, pharma, and the like. And when we think about those headwinds, those are opening up pretty attractive valuations, while there's also this positive long-term narrative that's there. So I do think that we can look at some of these other areas, particularly those that are a bit cheaper. There's not many of them. There's a few as areas of long-term beneficiaries of AI.
Marta, it's funny for me, but it's been a week where economic data has impacted technology markets, right? PPI. And I grew up in the Bloomberg school of why do we care about the Fed? Because higher rates discount the present value of future cash flows. And I just wondered if you'd react to that statement, please.
Well, listen, I mean, I do think when we think about economic data and we think about technology, there are these secular growth themes that can really push back against any headwind that economic data poses for technology. And then, of course, there are other areas of the market that are more sensitive. When I think about the economic data that we're seeing come through, all that comes out is this idea of mixed signals, and people can kind of project whatever view they want on the market and find evidence, or on the economy, and find evidence to support that view. I think at this point, what matters more are the secular themes rather than some of these economic data points that are trickling in.
Briefly, Marta, it's also been a week of record highs in crypto IPOs. How many questions do you get on that?
Well, it does come up more and more. I think one of the things that people are looking at when they see the record highs in crypto, or when they're looking at IPOs, or in fact the kind of resurgence of the meme theme, is what does this mean in terms of the speculative froth in the market? I don't think we're at all-time peaks there, but there is this measure of complacency that's been baked in, this kind of sense that nothing can go wrong, and of course that's reflected in valuations. So I do think when we're looking at those kind of signals, it's important to remember that things are a bit priced for perfection, and we could see some volatility in the near term.
Martha Norton, we so appreciate having you on today on Phone Power. Have a great weekend. It's time now for Talking Tech, and first up, Masayoshi Son has added $11 billion to his fortune in just the first 2 weeks of August. That's as his AI bets over at SoftBank sent shares to record highs. Look, Son's net worth now stands more than $33 billion, making him the second richest man in Japan, according to the Bloomberg Billionaires Index. Plus, Bill Ackman's Pershing Square Capital, well, it's revealed that it amassed a nearly $1.3 billion stake in Amazon. The firm initially disclosed it had built a stake during an analyst call in May. That's after the stock tumbled more than 30% over AI and tariff concerns. Look, a regulatory filing on Thursday showed that Pershing had accumulated more than 5.8 million Amazon shares. And Jackie Bezos, mother of Jeff Bezos, has died at the age of 78. According to the Bezos Family Foundation website, she passed away at her home in Miami after a long battle with Lewy body dementia. Jackie Bezos was an advocate for early childhood education. Alongside her husband, she was in fact the first to invest in Amazon in 1995, Ed.
Welcome back to Bloomberg Tech. I want to go back to Intel. The reporting is that the US government's thinking about using CHIPS Act funds to take a stake in Intel. Caroline, believe it or not, on the course of the week, this stock's up almost 25%. If it continues to chop around and climb just a percentage point higher, it will have its best 5-day gain, its best weekly gain on record ever. Just 7 days after the president said that its CEO should resign after ties with China. Later in the program, we're going to do so much more on Intel. But when you go into the data in the Bloomberg terminal, you can always surprise yourself, because in aggregate over the course of the week, what an astonishing stat that is.
It is quite the stat. 6 straight days of gains for Intel. What a winning performance. 25%, there you can see it in all its glory. Let's get into the world of generative AI now, though, because we are joined by Bret Taylor, Ed, whose extensive Silicon Valley resume includes Google, Meta, Salesforce, OpenAI. His startup Sierra AI helps companies build agentic customer service tools. You work with the likes of Ramp, with Clear, among others, Bret. And boy, is it competitive out there at the moment? How are you seeing your customer-facing agentic AI products being taken up right now?
Yeah, I've never quite been in a market like this. And as you said, I've been in Silicon Valley for a long time. I've started 3 companies, one in sort of the early days of the internet, one, call it about, a decade ago. And we have never seen this kind of customer interest. I've never seen this kind of revenue growth and customer momentum. But as you said, a lot of competition too. I think if you look at what is the impact of AI in society, there's probably 2 areas being impacted most right now: software engineering and customer service. We're in that latter category. We have the privilege to be the leader surveyed, as you said, traditional companies like ADT Home Security and DirecTV, and the fastest growing companies in Silicon Valley like Ramp. And it is such a privilege and so much fun to be in the middle of this right now.
I'm not sure. The competitors, particularly the older guard of SaaS, some that you help work with, like Salesforce, love the enthusiasm for the way that you're shaking things up in terms of pricing, though. I mean, outcome-based pricing models. How are you seeing that really change the cadence of which others can sell and how they're selling?
It's such a great question. If you look at the history of software, these technical shifts have also given rise to changes in business models. So kind of famously, when Mark and Parker started Salesforce, the world went from buying a perpetual license to software to software as a service and subscribing to it. Now our view is at Sierra, these agents aren't just helping you be more productive, but actually solving problems for you. And the best business model is to actually pay for a job well done. So at Sierra, we only charge our customers when it solves the problem autonomously for that customer. customer. We call it outcomes-based pricing. And we think it's going to really disrupt the software industry, because if you think about it as a business, what a great alignment of values with your partners. You only pay us when we actually save you money and solve the customer's problem delightfully. And I think it really aligns the software industry with all of our partners, and I think it's a really positive trend for the industry as a whole.
Bret, you founded Sierra with Clay in 2023, right? And I think back to when you came on the show in February 2024, it had grown so quickly, the company. Update us on what Sierra looks like today.
Well, we have customers across a wide range of industries, from some of the largest health insurance companies to banks to some of the fastest growing companies in Silicon Valley, like Ramp, which is we're also a proud customer of. They power all of our corporate credit cards. What's remarkable is just the size of customers that have aligned with us. So over 20% of our customers have over 10 billion in revenue. Over half have over $1 billion in revenue. These aren't just early adopters, right? These are some of the most traditional financial services firms, healthcare firms that are really saying, hey, I don't want my customers to have to wait on hold or press 2 for service. Can we have a multilingual, delightful AI agent just pick up the phone and solve problems automatically? And what's remarkable is just how well it works. You brought up Ramp at the beginning of the call. Their AI agent is actually solving 90% of customer cases completely autonomously. And that's obviously great for Ramp as a business, but for me as a customer of Ramp, it means I don't have to wait on hold 90% of the time. It's completely transforming the industry, and it is so fun to be able to help brands really in every industry transform their customer experience.
But Bret, I'd still like to learn more about Sierra. So you talked about you haven't seen growth like this in your career. Would you share with us an ARR figure? What Sierra's financials look like, number of team members, how aggressively you're hiring?
I won't share an ARR number, sorry, but maybe when we do, I'll come back on this show and you can hear it first. But I'll tell you, we have hundreds of employees. We've opened offices in New York, Atlanta, London. We're planning our expansion into Asia. We're the leader in this space. We'll do hundreds of millions of phone calls on our platform this year, hundreds of millions of digital chats. We're the highest volume company in this space. And really that scale benefits all of our customers. It means that we support more languages. It means that we've dealt with some of the most complex regulatory landscapes, from HIPAA compliance to the compliance regimes that apply to the financial services industry. We're really trying to be the best and safest bet for every company in the world who wants to transform their customer experience with AI.
And to do that, you're scaling, and I'm sure there's a little bit of a fierce fight out there for talent, and that costs money. Before we get into the talent wars a little bit, Bret, what about having to raise more money? Because you did back in 2024. Do you need any more? Have you got a good runway?
We have a good runway, but it's a great question, just because I do think that we really want to grow as quickly as possible. There's this great, I attribute to Albert Einstein, as quickly as possible, but no more quickly. And right now our business is working. I've never seen product market fit quite like this. And we're always asking ourselves the question as a management team, how fast can we grow? Because if you look around the world, the application of this technology is not limited to one industry. It's not limited to one country. How can we best serve not just multinationals based here, but in Europe and Asia as well? And so if raising more money will enable us to achieve that end, we're absolutely open to it. Thankfully, we have a really healthy business model, and it's not something we need to do, but absolutely something we're always open to considering.
Because in many ways, look, you raised $175 million last year, led by Green Oaks Capital. I'm thinking like $200 million is now what Meta's willing to pay to get one person in terms of talent, Bret.
Yeah, we all chose the wrong profession here.
You didn't, but Bret, I mean, I'm no coder, but Bret, tell us a little bit about trying to get that sought after talent. Do you need it, and how fierce is it?
Well, first, I do think there's a slight difference between the really small handful of researchers building these foundation models at the research labs. And, Sierra, we're an applied AI company. So you can think of us not necessarily as the folks doing the R&D to build these frontier models like OpenAI, GPT-5, but really taking all of those models and fine-tuning them and applying them to a solution in the marketplace. So you can really think of the market, I think of it really in 3 areas. You have the companies building these frontier models. OpenAI's models are obviously the leading and frontier models in the space. You have companies building tools. So what are the tools you need if you're applying AI in your business? These are companies that can do data labeling and data transformation and data storage. And then you have companies like ours and Cursor and Harvey that are taking all of that great technology and making a push-button solution so you can just solve a problem without a lot of implementation time. We just went live with an international retailer in 15 markets in 6 weeks and are solving 85% of their customer service cases automatically. That's what really an applied AI company does, is makes it easy to consume, easy to deploy. So thankfully, we're not competing in the market for some of those, I think, widely publicized researchers. But as you said, it's a competitive market. It's a competitive market for talent, as it always is in the Valley.
You know, Bret, over the years, I got told a lot of stories about you in meetings, like in the Salesforce context. And, you know, basically people say you're pretty frighteningly effective when you talk to customers. But you're also, you know, you're a busy guy. You have a very unusual dual role, right, as chairman of OpenAI and chairman of its board. That's an unusual gig. How do you split the time?
You know, I love to work is the short answer. So I work from the moment I get up to the moment I go to sleep, and I love every minute of it. And, you know, some weeks I'll spend more time at, some weeks less. It's really what the organization demands. And, you know, it is a lot of work, but it is such a privilege just because, well, I'm very excited about what Sierra's doing, to be able to spend time with, I think, the greatest research lab in the world, developing, I think, the most important consumer product in the world in ChatGPT is such a privilege, and it makes me a better leader. I understand AI with more depth and nuance. And then similarly, hopefully my experience having scaled a lot of companies in the past is helping OpenAI. I think it's scaling faster than really any company in history. And so it's so fun. I wouldn't have it any other way. Sleep is for the weak.
Right. The big question our audience has for you in the OpenAI context is how much you're working on this relationship with Microsoft and how much you personally are focused on the restructuring or the move to a new or different corporate structure.
Well, Microsoft is OpenAI's most important partner and has been for years. So it's a very important relationship. The board's role is really specific. OpenAI is a not-for-profit. Our fiduciary duties on the board are really related exclusively to our mission, which is to ensure that artificial general intelligence benefits humanity. And so we're always thinking, how do we set up the organization over the long term to ensure that we can achieve that goal? And, you know, one of the things that we've talked a lot about is, you know, since the company was founded as a small research lab, the level of capital expenditure required for the infrastructure for AI, I think, exceeds anyone's expectations that they had a year ago, let alone 10 years ago. And so really thinking about how do we ensure that we remain a mission-driven not-for-profit, but also set up our organization so we can raise the capital we need to achieve that mission. So that's what I think the media has appropriately called the restructuring. It is something that we're working on. Nothing to announce at this time, but I think it's one of the most important things we work on as a board, because your job as a board is to set the company up for the future, and that's really how we think about it.
Do you think you'll get it done by the end of this year, Bret?
I can't really comment on timelines, and you know, we're really just trying to work with all the stakeholders who have an interest in it, and most importantly, focus on the mission. But no update on the time frame.
Bret Taylor, CEO of Sierra and chairman of the board for OpenAI. Thank you very much for your time. This is Bloomberg Tech, and you're looking at a live shot of the Principal Room. Check out the Bloomberg Tech podcast. You can find it on the terminal, as well as online, on Apple, Spotify, and on iHeart. This is Bloomberg. Okay, all eyes on Meta real quick. In the session, it's made attempts to hit all-time highs, and at one point, go beyond $2 trillion of market cap for the first time. Where will we close? We don't know, but it's exciting and it's one to watch. And we're also thinking a lot about Meta's AI app, which is facing mounting pressure with users complaining of an under-personalized and inconsistent experience. The tech giant admitting this is, quote, just the first of many steps as the company will continue to make updates over time. Joining us now is Bloomberg's Natalie Lung. This is the post-launch digest. Tell us what we need to know.
Yeah, we have tested the app for a few weeks and asking it basic inquiries, asking it for personalized recommendations. And overall, we found the experience rather inconsistent and it felt a little bit half-baked. For example, I asked it to give me recommendations on what to do over the weekend here in New York City. For some reason, it knew my zip code. I might have provided it to an advertiser one time, but it wasn't able to personalize it to that area. The unique thing about it, apart from rivals, is that it has a discover feed where you can see how others are prompting and interacting with the chatbot, and there are like endless images there you can see.
Endless images that perhaps aren't that relevant to you, and sometimes the more edgy types of chatbots you might not want to interface with.
Yes.
Natalie, what's so weird as well is I interact with Meta AI actually more within the WhatsApp offering and maybe within the Instagram offering. Why is that not taking my data that I'm feeding it and bringing it over to Meta AI?
Right now, all of those experiences are not connected, as you rightly pointed out. It is on WhatsApp, it is on Messenger, it is on Instagram, but they're not connected, which makes it a little bit fall short of some of the personalization ambitions that Zuckerberg has.
Bloomberg's Natalie Lang, a real deep dive. Go read the analysis. Getting back to our top story, the White House is set to consider using CHIPS Act funding to take a stake in Intel. According to sources from Bloomberg's Ryan Gould is here, who helped break this story. It's been a very busy 24 hours. Do we have any idea of how much equity they could take for this?
Not yet, Caroline. We're still trying to find out exactly how much the government is talking. I mean, just on the base of it, if you think about the problems that are facing Intel right now, you're probably looking to solve something as big as Ohio to onshore manufacturing in the US. You're talking tens of billions of dollars that the company needs. Now, I'm not going to suggest that the government is going to go out and put that money in. We don't yet know. And the government has not obviously commented on this reporting yet. But I would say that, that the challenges facing Intel are vast. And I think most investors and analysts know that. I think just at the top of this, though, it's worth taking a step back and thinking about what a difference a week makes. If you think about Donald Trump calling for the resignation of Lip-Bu Tan, the CEO, last Thursday or last Friday, I mean, a week later, we're now on the cusp of maybe a potentially game-changing deal, at least in the short term, for one of America's most beleaguered companies.
Bloomberg's Ryan Gould, part of the reporting team on an astonishing week for Intel. Thank you. Let's get more on Intel and Washington's chip goals and how this all fits in. Ben Verharen, Creative Strategies CEO. Ben, for loads of people, this isn't actually an issue of money. For Intel, it's an issue of technology, and it's an issue of no customers. How did you react to Bloomberg's reporting in the last 24 hours?
Yeah, I mean, I think we've been looking at this from some sort of a leaning in this direction for some time. I mean, obviously, when Trump came up and said what he said about Lip-Bu Tan, we felt that this was in light of wanting to do, or at least have a broader conversation that had not had happened prior. If he's noted, like Intel was not involved in a lot of the sort of public displays of America First, even though everybody knows they're America First. And obviously, his comments on earnings about they may not go forward with 14A without help, I think was very telling. And I think all of that led to this moment, which is, from a national security standpoint, and really anybody in security and knowing what's going on in chips in the U.S. should believe we want a U.S. company to make leading edge chips here in the United States, and that's Intel. So we want to see some resolution.
Right.
It's 100% clear, like you said, they need customers, and we need to figure out how to get some form of capital so they can keep going.
Over the course of 5 days, Intel's up 27%. If it closes at those levels, it will be the biggest weekly gain on record on a closing basis, which, Is Lip-Bu Tan the man for this, Ben?
Yeah, I mean, I think his approach is fairly pragmatic, right? It's not just about build and invest, it's build the right technology, but do so in a capital way that makes sense. I think that's really what the board wants. That's what investors want. And I think really the strategy is, again, how much money do they actually need? I do think the tens of billions of dollars is right in terms of to get to 14A on top of what Intel will bring in customers. But the bottom line is, right, they can't do this on their own. That's what they're saying, whether it's customers or whether it's the government, there needs to be an infusion of capital that's not just Intel to make sure that Foundry is secured for the long haul.
Ben, there is this chicken and the egg situation because Lip-Bu Tan's saying, I'm not going to build it and wait for them to come. they've got to tell me that the demand is there. Does in some way taking equity by the US government incentivize others to get behind the government and say, we'll buy them, we'll take them if indeed you do innovate and get that 14A out there?
I mean, I think it's got to be more than just the government stake. I mean, I think what everybody's been speculating is, would that come along with some form of a tariff or something that strongly incentivized companies like NVIDIA, Apple, AMD, Qualcomm, et cetera, to not use TSMC, but then use some capacity of Intel, probably not 100%, but some of it. So I think it would necessitate that. Again, I think we want Intel to win on the merit of technology, which we think is very good on paper, but they just need to get some customer wins. And I think once that happens, the confidence, continues. But again, they're at a need for capital. And so how that arises is sort of the root of this situation.
Ben, that's interesting that you say the tariff tactic, because we've heard on Air Force One from President Trump today that maybe it go as far as 200, 300% tariffs on semiconductors. But then there's all these carve-outs, particularly for companies investing in the US like TSMC, like Samsung, Intel's biggest competitors.
Yeah, and I think the difference, though, is that Intel is more at the leading edge. So TSMC is not going to bring, and the Taiwanese government has been very clear, they're not going to allow them to bring the leading edge, so call it 2 nanometer, 1 nanometer, and beyond. Samsung's equally struggling to hit that number, even though they're trying. Intel's really the best bet. And more importantly, Intel is an American company. And so that's why I say, if this is some investment of private equity plus government, it makes sense that they want to protect that investment, so they will do what they need, right, in terms of tariffs or some other form of regulations that just encourage customers to use Intel. But again, I still think it's better if Intel just wins on technological merit, which we think they have. But we need a bridge, we need a gap, and that's kind of where everybody's struggling to figure out where that comes from.
Ben, Intel will not comment on Bloomberg's reporting. The White House hasn't said anything to confirm the reporting. But the chances you assign to this deal happening?
Oh, it's a good question. I mean, I think it really comes down to would they believe that they could structure this in a way that's fair, whether that's divesting of shares, right, or paying that back, like some of the ways where you've seen them when they have to do investments in companies. So it's not just a constant holding. I think anytime the government gets involved, it's very, very tricky. But again, right, they need customers. I'd say, I know this is a non-answer. I'd say 50-50.
It's okay.
But,
Phone a friend, 50-50 phone a friend. Ben Maher of Creative Strategies. Fantastic to get your opinion. Thank you very much indeed. That does it for this edition of Bloomberg Tech. An extraordinary week around semiconductors, Ed.
Yeah, the rest of the session, keep an eye on Intel. If it closes that level, best week on record. Recap everything we discussed in the podcast. You know where to find it on the Bloomberg terminal, as well as online on Apple, Spotify, and iHeart. From New York City and London, I'm taking a little break for a while, but we'll be back. This is Bloomberg Tech.